This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 9/8/21, show number 318. Well, we're seeing rotation in the market, Nick.
Well, that's been the theme, Kerry. We continue to see that. Today, we're seeing some money coming out of technology. This is what I call a hot potato market. Money goes in one day, comes out the next, and it goes into another area. And we're just seeing more money flowing from one sector to another, one industry group to another. Right now, the strength is really in the consumer goods names like Pepsi, Clorox, Hershey, the very, very defensive names, not military-wise are they defensive, but they're defensive in nature, meaning people will always need to buy those kind of goods. You need to buy razor blades and toilet paper. So again, that's where the money is actually flowing today. Energy was up a little bit earlier. Now it's come in a little bit. So that sector looks to have given up its early gains from what I could see. And then you have semiconductors. They're lower today by about 1%. And technology in general, which has been pretty strong lately, that is rolling over a bit today as well. So we're going to have to keep an eye on that.
All right. Well, hey, the market comes, the market goes. What is going on with Coinbase? It's been hit the past couple of days.
Yeah, so Coinbase, it looks like the news out there is that they've been hit with a Wells notice from the Securities and Exchange Commission. It looks like the notice is related to Coinbase's interest-earning product called Coinbase Lend. This hasn't even been launched yet. So again, the SEC coming out really against it with the Wells notice, giving them a little bit of a warning, and the stock is down about 4.4%. You know, yesterday, cryptos had a big decline. So I wonder if this news was leaked out early yesterday. I'm not really sure, but we're seeing cryptos under some pressure again today.
Hey, well, Bitcoin, interesting that you mention it. Bitcoin had broken 52K, right? It was up 52,000, and then it just got pummeled. And I didn't have a chance to look and see what it's at now. It looks like it's at 45.7 right now. It's down another 7.5%. Ethereum,
right now,
yeah,
it's a pretty big decline yesterday, and it did bounce back a little bit, but today it's weak again.
It's exactly what you said was going to happen, that it would break 50,000, that big psychological resistance point, go over it, and then dump.
Yeah, what a lot of people don't realize is that's a big level. Not only was it the 50,000 whole round number, it was also a 50% retrace. And you went up right into that resistance zone. A lot of people don't realize when things top out, and I'm not saying Bitcoin can't go back to new highs. There's always a chance of that. But if you even look at a chart of 1929, from the 29 top, the first major leg down, it had a 50% retrace. It bounced up 50% before proceeding lower into 1932. So, you know, again, everybody has to take that into account. When you get these big moves, a lot of times what they're doing is they're just really gathering people to get back on board, but the bigger money is also, you know, selling it out. And I watch the commercial money as well. And for the first time ever, 2 weeks ago, the commercial money actually went short Bitcoin futures, and they haven't done that before. So that was the first time that I've ever seen it since Bitcoin futures were being traded. Now they're basically just a little bit short. But that should be noted whenever you look at something like Commitment of Traders report. You always have to take note that these guys are always early to the party, the big money, and that's who you want to follow.
Yeah, so the big money, the futures guys, they saw this coming.
I think so. I think they see everything coming. They're the guys that are moving the markets. It's not the guy at home buying, you know, half a coin. It's the people that are actually buying multiple coins, right? So, you know, that's what moves markets. You always want to follow the big money. Everybody thinks like I'm a bull or a bear at certain given times. I just go with the market. I can't move the market. I just go with the market. And, you know, when you see something like Bitcoin, you know, I don't even trade this stuff. I'm just charting it for people. And I'm just looking at it saying, you know, you're into a big level here. You got to be careful.
Yeah. And it's, you know, it's been doing that sideways consolidation. it's kind of locked in a channel, which is really unusual for Bitcoin, this tight a channel. It breaks 50,000, sucks everybody in, and then promptly gets slammed.
It was a classic breakout pattern, and it went up into a resistance zone, and now you're coming back down. I got news for everybody. If this thing closes below 44,000 on a weekly close, there's big problems here. Big problems, not just your regular problem. There's major problems here. So remember, the best moves in the market come from failed moves. That's something I teach all my traders. And if this turns into a failed move, there's big problems here to the downside.
Yeah. So why is that the best moves come after a failed move?
Because everybody was sucked in on one end of the trade. And once the panic sets in with the weak holders, they all flee. And once the fleeing begins, it just cascades in on itself. And you just get multiple sellers come out. And it's like nobody could get out quick enough. And that's what causes major declines. And that's what causes major rallies too. If you have a bearish pattern that fails, you get a big run, you get a short squeeze. Same thing as above, so below. Same thing happens to the downside.
Well, that's really interesting. Hey, we could very well see something like that happen in the real estate market too, Nick.
Oh, well, if you remember in 2005, we saw that. So, a lot of people think that the stock market topped out in 2007, but the real estate market actually, the last time we had the big housing top was in 2005. It was 2 years earlier than the stock market, and it cascaded on itself. So again, that's why it's so important to watch chart patterns. This is a tough year, no doubt about it. The 1 year of a decade, I called it the year of trading dangerously. I knew it was going to be choppy and sloppy and all over the place. You have massive money printing going on. You have unprecedented amount of froth going on, 1999-like stuff. First with the SPACs, then with the micro caps. We've seen so much stuff going on this year. Bear markets in many, many places, but the indexes are holding up because of the money rotation, the hot potato type market that we're in. So again, you got to be very, very careful. Learn the charts, read the charts. It'll be your best bet going forward.
All right. And finally, gold and silver slammed yesterday. They're heading lower today. They had that big up day on Friday. I guess one day does not a rally make.
Yeah. So gold and silver right now, you had a surge on Friday. It was a monster move, especially in silver. But gold went up and hit its upside objective. So in all fairness, I'm not shocked to see gold pull back a little bit. But I think silver is the better play at the moment. And silver actually still has more upside to around that 25.50 level on futures. Right now, it's sitting right around $24. So again, I like silver better than gold at the moment, but it may do a little bit more backing and filling. Silver is down a little bit today, down 33 cents on the futures. Gold today, as we speak, down about $9.
Yes, you got to watch it for the upside reversal to know that the sentiment is changing towards gold, huh?
Yeah, we know what gold did was a classic, was just a classic bounce. And, you had that big sell-off into early August. I think it was the 9th we went down and pierced the 1700 level, then had that big bounce back up. And you caught a really good bid to around that 1835 level. And I talked about that level on this program. That's where it would find resistance. And it did exactly that. Now it has a chance to go higher, but you're going to need to go back and retest and build a little bit of a base. Then you could go up to around 1882, 1883. And I think that would probably be the extent of the move for now. But overall, gold could be in the making of what we call an ABC up pattern, but we need to see a little bit more here before I could say that.
Hey, Nick, and one thing I just wanted to cover, because it really, I think it's important to note this, but that when the Fed and the government first started giving money away, we both said that this was going to be highly inflationary. The effects of it would last indefinitely. We had no idea how long. And of course, all the geniuses on Wall Street said, transitory inflation. No, just because you print more money doesn't make prices go up. But when you give the money out to people and they spend it, it will cause prices to go up. And there is a chart, a commodity chart. I don't think I sent it to you, but I will. that shows the moves. It's on my site, financialsurvivalnetwork.com, but it shows the moves of the relative commodities. And it is shocking, Nick, to say the least. It is truly, truly shocking that, you see these prices go up. Natural gas is up 118%. I think that the higher nat gas prices, it's like what higher oil prices used to be. It will find its way into every sector of the economy. The only thing that isn't up too much is agricultural commodities. But you look at the total commodity price index, that's unweighted, all commodities together, 12-month change, 61.22%. Fuel, the energy index, 91%. Food and beverage index, 35. That's still a substantial move for food. Industrial inputs, so that's what you need to make stuff, 61%. And then you go into coal, Australian coal, 200%. South African, 116. Crude oil, 74. So all of these inflationary inputs, gasoline, 85%. It's up in the past 12 months. Jet fuel, 74%. And the numbers go on and on. The worst one of the whole group is Russian nat gas, because they have monopoly, and it was up 595% in the past 12 months. Even coffee, and to get your Starbucks, 40%,
Yeah, it's incredible. It really is incredible what has been taking place. And, we're looking at it real time, and we're seeing this happen. And there's no surprise. There's no shocker here. The big question is, everybody's asking, well, why isn't gold making a new all-time high? Why isn't, silver making a new all-time high? And that's the million-dollar question. I don't know why it's not, but the backdrop is here for a much bigger and larger move. But if they're going to suppress it somehow and it comes down, gold, I think, is a forecaster in and of itself. It could tell us that, hey, maybe these markets are going to come down too. We are into the volatile September, October months now. So, when you look at what people are paying out there, nat gas, in fact, is incredible because it was the cheap fuel, right? I have nat gas in my home, and basically, you turn your hot tub on it, you run it all day. It doesn't cost a dime. Now you're going to see the impact. This is testing. In fact, it's above the November 2018 top for nat gas futures. I mean, it's a parabolic move, obviously, but who's to say how high it can go? It can continue to climb. There's nothing saying this is over with yet.
No, agreed. And, what normally happens, like any other market, Nick, right? Things leap ahead, then they pull back a little bit, they calm down. But when the thing's in a bull market, just look at metals like palladium, which has been in a 2-3 year bull market. And you see it pulls back, it kind of looks like it calms down, and then boom, it's back to the races. And that's no doubt what's going to happen here.
And people don't realize, but it's things that you need, things that you use, things that are in products. We saw it a year ago with copper. I mean, copper was an excellent, test project there. I remember telling my members back in, I think it was May or April of 2000, copper was going to take off, and it even exceeded my highest expectation. I never thought it would go even to where it did. But, this is what we're looking at right now. And again, these prices, especially for nat gas at the moment, that's the hot one. I mean, it's just off the charts. Even today, up 9%. It's incredible.
Yeah, and nat gas, they call it the widowmaker because it's so hard to trade, because you just never know. That's one commodity it's so hard to actually call properly, right? But it's been going higher at times when it should be going lower. Right now, they're building up the inventory for the winter, and it should be going lower, and yet it's going higher. So go figure.
I mean, it's above the 2018 highs right now, and all I could say is nat gas is on fire. That's all I could say.
That's the truth, boy. It's on fire, and it's been a dog commodity. It's really been the redheaded stepchild of the energy sector. And now we see it starting to lead the sector. And that just doesn't happen. Nat gas is not the leader, it's the follower, because it's just always worked that way. When price per BTU got too high on oil, you switched to nat gas. A lot of these places.
Yeah, and let's not forget what's going on in Europe. I mean, Germany's got really one source to get nat gas in, and that's a really, really big issue. So again, it's Europe that really is the catalyst, in my opinion, here, and that's going to last a while. That doesn't get resolved anytime soon.
That's for sure. All right, Nick. Well, we'll leave it at that. We took a few days off for the holiday, but things are back to normal. Make sure you go over to Nick's site, inthemoneystocks.com, where Nick shows you how he did it, how he's beaten the indices all of these decades, and the Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Your emails are welcome, KL@kerrylutz.com. With that, Nick, we will talk to you on Friday.
Sounds good.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.